Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. Welcome to the publication symbol roundup. Today we're going to look at the November 3rd, 2025 edition of Barron's. What I'm going to do is I'm going to review selected symbols that are found in the issue with the aim, of course, of creating high quality, high probability risk managed trades. While I can't share the article content, since it's copyrighted material, I of course can share the company names that are mentioned in those articles. So that's what we're going to be doing today. But if you do look at the pin content section near this video, you'll see that there is a link to the Barron's table of contents for the current week. And so you'll see, kind of the titles of the articles and whatever little capsule descriptions that they offer up for those. And so you'll see essentially what the sources of the symbols that I'll be covering here is. So that's the game plan today. And what we're going to do is we'll look at some charts. We'll talk a little technical analysis, and then I'll show you some setups. All right. Before we get going here, though, the usual disclaimer: Precision Trading Labs, we are neither money managers nor financial advisors. Everything is offered up here as information and education only. And in the case of our subscribers and members of our community, is to help them develop mad trading skills. All right, so let's take a look. So right here, we're looking at one of the articles that was featured in the latest edition was talking about real estate technology, and so they mentioned a couple of companies in there, one of which is Zillow. And so I broke out the chart, and I started out as I always do in the daily chart, and then I kind of moved on to slightly to basically an intermediate time frame of 1 to 2 hours, and that's oftentimes where I end up. Usually, more often than not, the 2 hour chart is really more or less captures the flavor of the daily, but with just a little more detail, and it helps to refine a setup. So at any rate, there are two levels here that actually caught my eye. One of which is on the buy side or the bullish side, and one of which is on the bearish side. So right down here, this is a demand zone. Okay, and incidentally, if you go back, and the other thing that you'll see in the pin content section is a link to the introductory video of this series, where I actually go into in some moderate depth, talking about the supply and demand concept. That's the basis for our trade setups at Precision Trading Labs. So at any rate, this is a drop-based rally formation. This is a demand zone, and so when price returns back to this area after this exhaustion of sellers here, there is the expectation that there is untapped buying pressure in here. And so that is the basis for a bullish trade. And so, as you can see, I marked up here the two most straightforward ways, of course, of executing a bullish trade once price returns to this region at around 69.65 would either be simply to buy the stock or to buy a call. And those are, the two most straightforward ways of expressing a trade at this level. But regardless of what strategy you're using, the trigger point for the trade will be at 69.64, because that's essentially how the demand zone here is defined. Okay, and then the way it would work is that you get into the trade, you would have a stop out point behind here, and that in case the trade does not go as one would like, but then that's how we control our risk, by having a stop out point here. Okay, you'll notice over here behind the level here, there is this curve here. That is the daily lower Bollinger Band. And to be clear, this is the daily lower Bollinger Band. Okay, even though we're looking at a 1 hour chart, 65 minutes to be precise, but even though we're looking at a 1 hour chart, this is the Bollinger Band for the daily. It's not the Bollinger Band based on the 65-minute chart. All right. So that's the demand zone here. Up here, we have a supply zone here. Again, this is where we had an exhaustion of buyers here after a consolidation. And then when this thing meets its criteria about how it drops out of this, but if it meets that criteria, this is then considered to be an area of untapped selling pressure. So when price returns to this region, this is where we would execute a bearish trade. Okay, and so down here where we were going to buy the stock or buy a call, up here we would either short the stock or buy a put. But again, the trigger point will be identical for both of these. This would be at 77.14 because that's where I determined that the front line of the supply zone would be. All right, so that's one setup here, and let's take a look at some other ones here. All right, so here is an article about I should say we were looking at the Abbott Labs. This was another thing that was mentioned in the current issue there, and so right here, this is a drop-based rally formation here. This is a demand zone here. When price gets back here again, we're expecting that this is an area of untapped buying pressure that's essentially waiting to be released. And so when price gets back here, this would be the place where we would express a bullish trade, again, by buying the stock or buying a call. And so this is where we would get into the trade. And this ladder here just represents reward to risk. Okay, so this is where our stop out would be for this level here if it doesn't go our way. And this would be a 1-to-1 trade. That's a 2-to-1 trade. That's a 3-to-1 trade. Again, one could express this trade either by buying the stock or by buying a call. There was a big feature on Boeing. Okay, this is actually a great level over here. I really like this level here. This is a rally-based rally formation. Notice the consolidation where price just goes sideways, and then all of a sudden there is just this explosive move out of here as supply and demand go out of whack here, and what's left in its wake once there is no longer any supply due to this exhaustion of sellers, what's left in its wake is demand. Okay, and so when price returns to this demand zone, we're anticipating a bounce. So this is where we get in. Here's where our stop out point would be. And again, one could buy a call, or one could buy the stock or buy a call. Okay, and then up here again, here's our reward to risk proposition. And this actually up here, at least the way it looks as of today, we're going to wait to see how price returns here, but this might actually be a reasonable target for the trade. So you can see we would be shooting for a 3-to-1 trade on this. All right, so that's Boeing. Okay, this was another symbol that was mentioned here. This is actually another good level here. We have a rally, a base, and then notice then the price rockets out of there with this string of bullish green candles. And this goes obviously a long distance, which is part of the criteria of what we look at here. And so when price gets back to this area, where we would then again be looking to express a bullish trade out of here. One of the things we like about this is that there is a confluence of stuff that other traders are looking at, all going on in this same neighborhood here. So we have our demand zone here. Notice right here, that is the daily lower Bollinger Band, and then right there we have the 50-day simple moving average. So you can see there's this confluence of all this stuff kind of going on, all in the same region, which essentially suggests that there are traders that have a different lenses of how they look at setups, and yet they're all going to potentially be pointing at the same way. People that are looking at a lower Bollinger Band for a mean reversion, that's there. People that look at at a moving average as a dynamic trend line where price is going to react, that's going on here, and then we have our demand zone. So this is essentially what becomes a high probability setup for us. All right, so that's a setup I really like there. Okay, here's a Coinbase. Obviously, for the last few weeks, or at least the last couple of weeks, crypto has been in a downturn. You can see that's been reflected from this, but basically from this point where it was sitting as high as 400, it's now just short of 300 here. Right here, this is an area of kind of support here, as you can see in the daily chart. Price has dipped into this any number of times here. Really, once this whole thing I regard as kind of one point of contact. So that's 2, 3, and now 4. As far as I'm concerned, there is no trade here because of the fact that every time this comes back here, this actually tends to get weaker. You can see it's also sitting at the lower Bollinger Band here. So that suggests, this might just hold. But if it doesn't, then right here we have this rally-based rally formation. And that's actually really what I'm kind of hoping for. So this is just going to kind of have to sit for a while because obviously that's a fair distance down here. But as you can see, it doesn't take all that much for symbols in this space to move a lot. So that's what I would be looking at here. The other thing also one could look at is there are actually these single stock ETFs, and there is actually one for Coinbase, and which is about 1/10 the share price of that. And so we'll actually take a look at that as well, because the other thing we like about that is there is actually um, you can actually trade options with those as well. And so one of the things that we'll do is when we post this for our subscribers and our members, we'll actually take a look at both posting a setup for COIN as well as for the single stock ETF that tracks this. Okay, so that's the setup for Coin. Here's our friend Meta. So right here we have a rally base and a rally formation here. There's that gap up. You can see it's on its way down. This was its most recent earnings announcement, and you can see it was not met with great favor or acclaim by Wall Street. That was a major thump down. You'll notice also it did drop below its 200 period simple moving average. So if one gets into a trade down here, and we would use an option, caution and risk management is paramount here because of the fact that once something drops below its 200 period moving average, that is oftentimes the start of a swoon. So we'll see if this holds. But there's definitely some bearish sentiment that now comes into this now that it's dropped below the 200 SMA. So we'll keep an eye on that. So that's Meta. Here's this one here. Here's a drop base rally formation here. This one we would probably actually just pretty much just trade the stock. It's 14 bucks. There's not a whole lot of bang for the buck of using options for this, given the way we trade options, which is essentially we buy them, basically at the money or a bit in the money. We're not buying lottery ticket options where we're buying them like at $20 or $22 strike prices, and where it's going to cost next to nothing. But the only way you make any money with those, of course, is to have a huge move. That's not the way we go about it here. So for us, we're not getting a whole lot of bang for the buck by using options. So we would just essentially just buy the shares here. So there's a demand zone here, and then there's a demand zone down here if this doesn't hold. Like a couple of the other ones, this one actually has its Bollinger Band sitting right here. So that's actually an odds enhancer. Okay. Here is Rocket. Rocket Finance, which is it basically offers up the Rocket mortgage service. So this is part of that article that was dealing with real estate. And you can see there is both a supply and a demand level here. So frankly, I'm not really all that hopped up about, or I should say, I'm not all that loyal, even though they may have suggested, that this is a great area to buy. That's fine. All of these trades, incidentally, are really meant to be trades. They're not necessarily investments or long-term holds. So I'm just as happy to short something or to buy a put as I am to go long out of a demand zone. So I'm just as happy to execute a trade for these out of supply. Okay, so right here we have a a rally base drop formation here, and then right down here we have a drop base rally formation for a demand zone. Okay, and so right there's your long setup here where you could buy a call or buy the stock outright, and then down up here, of course, one could short the stock or buy a put. So those are your levels there. Incidentally, as I've been going through this, One could, of course, you go back and look at this. You of course can be starting and stopping the recording, or of course look at this after the fact and create screenshots of all this stuff. All right, so that's Rocket, and then there's Zillow, which was what we led off with. So at any rate, that's what I got here. So I would suggest again, go back, create screenshots of these, set these up. Even if you don't take the trades initially, monitor them, see how they behave, and kind of get used to the format of what I'm presenting here, as well as to start to acclimate yourself to this supply and demand concept that I was talking to you about. We're going to be doing this every week, and then starting next week, we'll be doing these where we present at the beginning of the week the setups that arise from the current issue of a publication, and then at the end of the week we'll then kind of give a rundown as to where prior setups, what has happened with them, win, lose, or draw. We'll kind of go through the results of setups, as well as kind of give alerts about where things might be nearing an entry point. So all of that will be upcoming over the next few weeks. Again, check the pinned content section, where you can get the link to the table of contents, as well as the initial video that I had done that introduced this whole concept. All right. So at any rate, that's what I got. This is Mitch Firestone with Precision Trading Labs. Thank you for joining me, and I will see you next time. Take care. Bye-bye.